Hello everyone! Today's video dives into one of the most surprising and dramatic stories currently unfolding in the US stock market, and it centers around a company that until very recently was almost invisible to mainstream investors. I'm talking about DataVault AI, ticker symbol DVLT, a stock that isn't trading right now because the US markets are closed for the weekend. But its last trading session on Friday, November 14, 2025 was nothing short of explosive. DVLT ended that Friday session at $1.83, jumping 18.83% in a single day. That's a massive move for a stock that costs less than $2. Usually, when you see a sudden surge like that in a low-price stock, the default assumption is simple. It's a risky penny stock momentarily pumped by social media hype or retail traders hoping to make a quick buck. Most people shrug and think, yeah, that's probably just a low-float gamble, the kind you'd expect on Robinhood or SoFi when someone sees a trending news headline. But that assumption couldn't be more wrong this time. What's unfolding behind the scenes at DataVault AI is far bigger, far more serious, and potentially one of the most pivotal corporate transitions in the microcap AI space. This isn't a meme pump. This isn't random volatility. The market is trying, very quickly, to adjust to a wave of information that completely challenges everything investors previously believed about this company. And all of this momentum, all of this sudden energy is building up to a major moment. DataVault AI's upcoming earnings call happening on Monday, November 17th. But before we get into the future, we have to understand the narrative that kept this stock suppressed for so long. For months, DVLT has been categorized as a typical high-risk microcap. Tiny revenue, heavy losses, and burning through cash at a pace that most investors find terrifying. If you're someone who sticks to conservative, diversified approaches, using something like Schwab Intelligent Portfolios or a Fidelity Managed Account, DVLT isn't even on the menu. Most people like that stick with large-cap giants, maybe some Apple, some ETFs, some blue-chip mutual funds, safe, predictable, boring. But the self-directed investor crowd, the ones glued to their brokerage apps looking for the next pre-NVIDIA, pre-Tesla type opportunity, those are the people who chase microcap AI plays. They aren't diversifying, they're hunting. They want the next rocket before it takes off. And that's where DataVault AI shocks the entire system. Because the usual assumption, that DVLT is just another AI-themed company with more hype than substance, is being obliterated by what the company itself is now projecting. Just recently, DataVault AI released astonishing revenue guidance. $30-50 million for 25, and over $200 million projected for 2026. Those aren't numbers you casually throw out. Those are numbers that force institutional investors to pause and reevaluate their models. And perhaps even more dramatically, they announced a pending $150 million strategic investment from Selex Holdings. That isn't a small check. That is a transformational injection for a company that, not long ago, had less money in its bank account than many people have in their home renovation fund. Let's talk about that Friday price action again, because it tells an entire story on its own. That 18.83% spike wasn't triggered by thin trading or low volume. DVLT traded nearly 50 million shares in a single day. That's not small. That's not unnoticed. That's not a random penny stock crowd clicking buy from their sofa. That's a battlefield. You've got high-speed traders using advanced order routing, people on interactive brokers studying level 2 data, and then you've got totally different investors on SoFi or Fidelity's mobile app FOMO buying into the hype. It's a clash of strategies, of speed, of fear, and ambition. And the volume tells us a critical story. Institutional players are now watching. Funds that normally wouldn't give a microcap the time of day are suddenly calculating valuation models. Because when a company guides for $200 million in future revenue, the professionals are obligated to run the numbers, even if they don't believe them yet. Now let's shift gears. Let's talk about what this company actually is. Most people still only vaguely know DataVault AI as some AI company, but that's outdated. Before its transformation, it was actually Wizza Technologies, a small wireless audio hardware company. But that identity is now long gone. The reinvented DataVault AI is not doing audio hardware, not dabbling in generic AI, and not just marketing AI for clout. Instead, it has pivoted into something far more aggressive and potentially far more lucrative: Web 3.0 data monetization and tokenization of real-world assets. Let me repeat that, because this is the centerpiece. DVLT is attempting to build a system where data, Genomic data, biotech data, sustainability data can be turned into tradable digital assets. This is where things get intense. They aren't just talking about doing this, they've already secured major deals. A $10 million exclusive license agreement with Cellex Holdings to tokenize biotech and genomics data. This contract includes potential milestone payments of up to $2.55 billion. A separate agreement with Nature's Miracle Holding to tokenize carbon credits, which includes a $2 million fee plus a massive 35% royalty on all gross revenue from the system. This isn't AI hype. These are concrete business transactions in sectors with enormous global demand. Now, after hearing all this, you might think the company must be financially rock solid. But here's the twist. The financials are the scariest part of the entire story. As of September 30th, 2025, DataVault AI had only $168 million in cash. But in the first 9 months of 2025 alone, they burned $23.2 million in their operating activities. That is a brutal, unsustainable gap. A death sentence for most companies. And that explains why DVLT traded as low as 25 cents earlier this year. Investors weren't being irrational. They were terrified the company would run out of money before any of its big ideas became reality. Which brings us back to that $150 million Cellex investment. That is the lifeline. The deal that changes absolutely everything. If it closes, the cash crisis ends overnight. The company suddenly has enough financial fuel to execute, expand, hire, develop, and deliver on its massive revenue guidance. That's why Friday's move wasn't a coincidence. It was the market catching up to the possibility that DVLT won't just survive, it might actually explode in scale. So now, we arrive at the crossroads. The pressure is reaching its peak. Earnings are just 2 days away, and we're staring at two extreme scenarios. Management confirms the revenue guidance, reinforces that the Cellex investment is officially on track, and possibly reveals more partnerships. If that happens, the current 1.83 price looks like a once-in-a-generation bargain. The online investing crowd will lose their minds, buy orders will flood platforms like SoFi and Fidelity, and the narrative shifts from risky microcap to emerging powerhouse. But if management walks back the revenue projections, or worse, says there's a delay or issue with the Cellex investment, then this entire momentum collapses. Without that $150 million, the company's cash burn problem becomes lethal again. In that case, Friday's price action is nothing but a pre-crash warning. The stock could spiral hard. This is why DVLT is not a set-it-and-forget-it investment. This is a high-stakes gamble, an all-or-nothing story where the outcome hinges on execution and financing. So now it's your turn. With the earnings call coming on Monday, the question becomes, what are you doing? Are you buying DVLT, or do you think the revenue projections are too ambitious? Is this a hidden giant or a ticking time bomb? To wrap everything up, we're witnessing a perfect example of the battle between expectation and reality. Expectation, another sketchy microcap AI play. Reality, a company undergoing a dramatic transformation with enormous deal flow, huge projected revenues, and a make-or-break investment that could rewrite its future. The 18.83% price jump wasn't the end of the story. It was the signal that the story is just beginning. This is not financial advice.